COSM still following our implied path. What path was that? Actually, that path is sideways. Let's go ahead and talk about a few things in this video, as there could be some downside to look for COSM in the immediate short term. What is up, you guys? Thank you so much for stopping by once again on this fine Thursday night. This is ARCa coming at you with a COSM technicals, raw price action, maybe some statistical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. With that said, let's go ahead and dive right in. Okay, so yes, we are looking at COSM on the 30-minute, and it has been following that very boring sideways price action, right? So what could happen for these next sessions? Well, I actually haven't touched on this in just a few videos. So we're going to look at the immediate short-term time frame analysis, particularly with the Crypstex ARC-Series indicators, okay? So we're going to start off, first of all, with the enhanced MACD. So the ARC Enhanced MACD is actually firing off a bear signal, and that bear signal actually came in on December 21st. So it's still honoring it. It has moved now below the mean. A good thing is that the Bollinger Bands are actually starting to contract just a little bit. Usually when they contract, similar to this area here, a move to either side is imminent. Okay, so in this case, we are definitely have to practice some other strategies to see what that trajectory can be. Okay, so now let's go ahead and hide the enhanced MACD, and we're going to bring up now the ARC Armor. Okay, so the ARC Armor is actually an indicator that's comprised of several exponential moving averages, all very close in proximity. By placing them so close in proximity, we actually get this wave of motion or directional waves, and these directional waves actually help us in understanding where we can buy and sell, right? So we have a long signal here, it goes up. We have a short signal here, it goes down. We have a long, it goes up, right? And now this short signal is actually the reason why I'm talking about this. The short signal presented here on the 30-minute immediate short-term time frame has not been invalidated with another buy signal. Okay, so we're still looking at a short signal here. Okay, so let's go ahead and now hide ARC Armor and load one more. So we're going to do ARC DBSI, which is a statistical type of indicator. Okay, so this indicator actually takes a cumulative score of every single candle throughout the entire trading history of COSM in whatever time frame you're in. Okay, so in this particular case, we are in the 30-minute. There is an interesting set of things here, though. Okay, so usually when we do get these types of bullish hammers at the bottom of a trend, a reversal or an upside trend could be in play. But please notice that among actually after getting all the score from the candles, we can actually see that the percentage is right here, giving us a score of 99% bears and 1% bull. A very interesting and contradictory thing here to the DBSI, which is leading to the overall sentiment being confused and maybe pensive about something happening, is this here. We got a little buy signal right at this 30-minute time frame. So this buy signal came in, but yet it's showing us that we have utter bear strength. So actually, let's look at the DBSI and the hourly and see if it still suggests a buy signal. Okay, so in the hourly chart, the bears are leading by about 76%, bulls at 24%. The sell signal was actually presented just in confluence with the enhanced MACD. And that's on December 21st, and it's still honoring it. So this is probably more along the lines of the time frame we're going to have to follow for DBSI. Okay, so let's move on to the next chart and see what we have. Okay, so this is the perspective of the larger broadening descending wedge that we've been looking at for quite some time now. We have faced our fourth breakout from the golden rule of three, and we have retraced to come back and test the newly converted resistance, which is the top trend line of the wedge, as now a support. So you can see we actually have two daily candle iterations to where we did test that support. Okay, so now this price action, I mean, a daily candle printing in this hammer it's very nice. Okay, but I would love a longer wick to the downside, okay? And usually this hammer candle would actually be preferred below the previous day's candle. So you're looking at 2 days ago, still a little bit lower. So if we were to, for example, print the next daily candle with a wick touching down to this little tiny gap that we've noticed for quite some time now from the wick high of November 21st and the wick low of November 22nd, if we were to wick down on the next candle that we're printing tomorrow, right into that area, and then we recover really quick, that could be a bullish thing, and it's actually something that Wyckoff theory calls as a terminal shakeout. So that spring is actually something that we could use to our benefit. And to be very honest, if I'm looking at the price action here, creating a series of we don't have to count this one because this is really FOMO driven, but we are making a series of higher lows. Okay, so in this case, I can only favor a little bit more to the bearish side into possibly coming back and retesting our newly converted resistance into support, which is the top trend line of the broadening descending wedge. Okay, so if we're going to look at that bounce, we can definitely expect some type of immediate reaction from touching right down here into the upside. Okay, so that could be a good thing, and it looks like COSM could potentially be in a loading type of moment. You know what I mean? Like it's probably picking momentum up. All right, so let's go ahead and move on to the next thread of analysis, as actually the momentum picking up is actually a good segue here. So this is the daily chart, and we're looking at momentum here, represented by this indicator BBWP. Volatility. So volatility is direction neutral. Okay, so in order for us to get to gain a bias for that direction, it's actually best for us to try to use it with maybe a stochastic oscillator. So in this case, stochastic momentum will be that indicator of choice, which is actually proprietary to TradingView software. And by the way, I'm actually accepted as an affiliate through TradingView, so having maybe you sign up, and that actually helps me out for my trading future. Okay, you guys. So for now, I'm not gonna actually explain the vast details of this enormous statistical backtest that I did on it by hand, but in short, it was suggesting an upside continuation based on momentum suggesting upside, and volatility being at critical, which is measured by anything being above this trend line here that my cursor is over. So that red trend line marks the 90%. So whenever we're within that 90 percentile, critical volatility is actually there and loading. So in this case, momentum has drastically changed its direction. Its bias is now towards the downside. Please do mind that I've actually backtested momentum oscillator. I've actually backtested the momentum oscillator in several tickers before, and I'm actually getting a read of about 75 to about 91% in accuracy and actually guessing the asset's direction. So in this case, I am giving it some weight since we are in the daily chart. It is a larger time frame. It is suggesting a downside continuation, so I can only favor the bears in this instance, okay, which is actually in accordance with what we're talking about here. Maybe potentially coming right back down to retest our newly converted resistance into support, and or touching down the previous gap we actually recently filled, and using that as that form of a terminal shakeout, okay, so, or that spring to the upside. So let's go ahead and move on now to the next chart. Okay, so we're going to be looking at the RSI here. Okay, so for the, actually, you know what, I don't have the divergence chart. Something actually must have happened. Actually, let me, no, yeah, I definitely don't have it. Wow. Okay, so I don't know what happened to it. So I'm going to just explain to you guys real quick. The upper half of the RSI is the bullish control zone. Okay, so now the lower half is the bearish control zone. The inner workings of either zones, this can be considered the weakness percentile. And the outer zone, in the outer zones, for example, here, this is the bull strength percentile, and this is the bear strength percentile. Okay, so in this case, we can actually see that the RSI signal, which is the purple line, is now about to make a cross below the 14-day moving average, which is actually standard to any RSI setup. Okay, RSI being relative strength index, and it is also a momentum-based indicator. Okay, so in this case, whenever we are in this junction between the bear weakness and the bear strength, the gravitational pull will likely happen straight into bear strength. Okay, but as long as we maintain ourselves within the shallow areas of either zones, we can still continue to expect sideways trading, slightly bearish, slightly bullish. Okay, but let's go ahead and move on to the upper time frame. So we're going to look at the bi-hourly time frame here, and you can see that it's actually suggesting nothing but a neutral bias, and it's actually straight across, suggesting a continuation of sideways trading. Okay, so now the 6-hour time frame is also suggesting a bit of sideways trading as well. We're getting a little bit of a hint from the 14-day moving average, pitched slightly to the upside, but again, while we remain within these shallow areas of the RSI, we can actually expect sideways trading. Okay, so there is a gravitational pull, type of magnetic field here that we actually can just ride within until one side favors the other side and actually it grabs a pull to the downside or upside. Okay, so we are actually looking at just some teeth grinding here. Okay, it's chalkboard grinding. Okay, so the daily is actually giving us a little bit of a further hint to the downside. It is attempting, the daily RSI signal is attempting to break out from that very shallow area of the bear weakness percentile. We're also getting a suggestion from the 14-day moving average for a downside continuation. However, the pivot is not so strong, so we can, you know, when it's not strong like this, that gravitational pull actually brings us right back in, and we can continue on sideways trading. Let's look at the buy daily just in case. All right, so the buy daily also is in that shallow area, but it is facing a little bit more of a significant downside pivot. So that downside pivot can absolutely have us continue on to the downside, but again, that risk of being gravitationally pulled back into the prior zone is likely. Okay, so now the 3-day suggesting downside. I can see the 3-day is actually giving us a temporary downside, by the way, since it isn't a bullish stance. That bullish stance is actually signaled by the fact that the 14-day moving average is below us. Okay, so the RSI signal can actually continue on to the downside temporarily, thus meeting the 14-day moving average and using it as a form of support before a continuation onto the upside. Okay, so this type of bounce that I'm looking for on the 3-day is potentially what we're talking about within this area here on the daily chart for the broadening descending wedge. Okay, so we can actually face that downside in the next couple days, and then we can actually look for that upside move. Okay, so it looks like we're going to be pensive for the next few days, maybe 2 to 3 days, maybe even more, who knows, but we're definitely still, I mean, honestly, in my personal opinion, we're still in a bullish place overall in a macro perspective due to the fact that we are riding this broadening descending wedge. Okay, so please know that the broadening descending wedge has a natural playbook. Okay, so the playbook strategy to trading this formation is actually bulls enter at the confirmation or validation of the newly converted resistance of the support, and from there it's going to be probably a 2-week play, 3-week play since we're on the daily, but the usual take profit from a descending broadening wedge is found at the genesis of the formation itself. Okay, so in this case, we are looking at a top target of about 71.74. Please do know that I'm actually not saying that we're going there. There is no certainty that we are going there, but per the playbook rules, that's how this descending wedge is traded, okay? So please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Please know, please do your own DD, okay? You guys, everything will be just fine. Okay, as I can't actually suggest for you to buy or sell any assets. Okay, you guys, it's just me and in my studio, just a normal dude presenting his opinion for price, action, or direction in a specific ticker. Okay, you guys, if you have any questions or concerns, please don't hesitate to reach out to me on Twitter or Discord. I'll make sure to leave those links in the description below for you to consider joining. If you are interested in acquiring any of these indicators from the ARC series, please reach out to me, DM me. me, okay? Send me a message and I'll be able to give you the details as to how to acquire these indicators, okay? So please know that it's also not in conjunction with buying a subscription with TradingView software, okay? So TradingView is actually, they're per se the boss, okay? So Crypstex is an authorized retailer within TradingView, okay? So just like other retailers, they are one of them as well, and they are also the authors of this of these indicators that we have been graced to use. You know, this is awesome. Okay, you guys. So yeah, I think that's pretty much it for the video, and I wish you well. I wish you a very good night, and I will catch you at the bell mañana. Adios.